Awesome. Thank you, everybody, for your patience. We were getting to some things figured out on the back end. We appreciate you all. We love to see an on-time group. So kudos to you all for being on time. Uh, Good afternoon, good morning, good evening. This is being recorded, so I say that for those who will watch it at a later date. But for this group specifically, good afternoon. Glad for you all to be here. Bianca, it is good seeing you again. I know I was out the prior week, but I got a chance to see the recording, and you and acting director Claire Whitmer did an excellent job. And so I just want to say kudos to you all, and it's good to be back.
Thank you. Yes, it's good to be back with you, Isaiah.
Absolutely. And so to the group that we hear today, and for those who are going to be watching in the future, we want to say thank you for joining us again to our webinar series on labor and employment laws for 2025. I'm already in 2026, forgive me, 2025. Excited for you all to be here for this webinar specifically in partnership with the California Chamber of Commerce and also the Small Business Policy Council. We have an expert today, Bianca Siad, who has been extremely helpful and extremely vital in bringing crucial information to small businesses around the state of California to make sure that they are in compliance and are up to date with all the 2025 laws and regulations for their small businesses. My name is Isaiah Green, and I serve as California Office of Small Business Advocate, Central California Regional Advisor, as well as Assistant Deputy Director, and I oversee a magnificent team to support all 4.3 million small businesses across the state of California to provide crucial information to the resources available. And so today is going to be an excellent topic on what's today's topic, Bianca? Because I'm a week behind. Tell me, I'm a week behind.
We are going to talk all about paying our non-exempt employees in California.
Paying non-exempt employees in California. I would like to say wages and compliance. That's where my mind goes. I'm so excited today. Bianca, I want to turn it over to you, but I also want to just show an immense gratitude for this partnership and this collaboration, and excited to hear for what you have for us today. And if you have any questions in the chat, please feel free to use the Q&A box. We will monitor the questions along the way, and we may stop and answer some of those questions. And we do have a segment at the end where we will have a Q&A. We will have a Q&A session. And so, again, thank you all for being here. And Bianca, I'm going to pass the baton to you.
Thank you so much, Isaiah. Thanks everybody for being here. And for those of you who are catching the recording later, this has been such a wonderful partnership that we've been doing. And I can't believe how far we've come already. And so for those of you who haven't seen previous episodes, I definitely encourage you to check out the page that has all of the other programs that we put together, because there's a lot of wonderful information. And you may hear me today refer back to some of that information as it will tie in with what we're talking about today. Now, before we get into the agenda, I do just have to give a disclaimer, of course, as I am an attorney. However, I am not your attorney, and so nothing in this presentation should be relied upon as legal advice. If you do have specific situations or circumstances that concerning you want to make sure you're talking to legal counsel about those. Another reminder for those of you who are referencing the recording from a later date, contents of the presentation are current as of the date of the presentation, so do just keep that in mind. We also ask that the presentation not be recorded, duplicated, or distributed, either in whole or in part, without written consent from CalChamber and CalOSBA. All right, so here is our agenda today for talking all things about paying our non-exempt employees in California. We'll break down a little bit what that means for those of you who may not even know. What do you mean you're talking about non-exempt? But basically what you can put today's topic in the category is wage and hour issues, is what we're going to be focused on. Not exhaustive, of course, because we only have so much time together, but really just wanted to focus and highlight the key items that you definitely need to be aware of. So first, we're just going to talk about why is wage and hour compliance important, particularly in a state like California. what it means to pay our employees for all hours worked. What does that really mean? When are we going to be considered to be obligated to pay our employees around work? We're going to talk about overtime. And we're also going to talk about reporting time pay, which some employers may not be aware of if somebody is scheduled to work and yet they're not put to work for their entire shift. So we'll talk about what that looks like, as well as travel time and expense reimbursement obligations. And then we are going to round it out, of course, as we have been throughout the series, with employee handbook reminders, because as we'll discuss, even though it's not a requirement, it is a best practice. And so what does that look like if we're trying to incorporate wage and hour best practices into our employee handbook? All right. So first, let's just kind of take a bird's eye view at wage and hour compliance and just talk about, why does it matter? What are the things that we need to be aware of that are out there? Because one of the things that I've learned, it's one thing to start a business, and we know for those of you small businesses, right, it's a lot just to get your business off the ground. Then you get to a point where you're growing, you're adding employees to the mix, and now you're suddenly in this whole new world of compliance, and you don't know what you don't know. So that can get us into a lot of trouble in California. So first, let's talk about what are the risks that would come with non-compliance. So we've got the California Labor Commissioner, is the state agency that audits and investigates, right? So that can create risk if we're not complying there. We also have the ability for current or former employees to file Division of Labor Standards Enforcement, or a DLSE, administrative complaints, again, and that can trigger investigations and audits. Then we also have to be thinking about the possibility of civil actions, and this can include class actions, as well as private attorneys general actions. And again, this is unique to California, and these are also referred to as PAGA actions. They are similar to class actions, but not quite the same. But basically, you can have a group of employees that is bringing a suit, and they can be very costly, similar to class actions. So what we would be looking at, if we have a civil action brought, or through the Labor Commissioner's office, we are looking at, obviously liability for unpaid wages, but it's not just those unpaid wages that we have to think about. We also have penalties that come on top of those. We also have liability for, that can include meal and rest period violations. Now, we have an entire episode that was dedicated to meal and rest periods. I would encourage you to go back and review that, because we talked about the very specific technical requirements that come along, things like they need to have, your employees need to have breaks by a specific time into their shift. They need to be clocking out. They need to be relieved of all their duties. Another area that can get us into trouble is inaccurate wage statements and late final pay once we terminate an employee, if we're not promptly paying their wages. So we also have penalties that can come with a PAGA action, like we talked about, as well as attorney's fees in civil lawsuits, and then, of course, any potential settlements or judgments that may come from the lawsuit. So even if you're settling outside of court, you're still going to be paying something, right, to address all of that liability, not to mention all of the money that you're going to be spending on defense counsel for your attorneys. So one of the benefits that we've seen come over the last year or so has been that we did see in mid-2024, we saw some reform around PAGA actions that does allow employers who take what's referred to as all reasonable steps to be in compliance with wage and hour requirements to essentially have their penalties under PAGA capped to a certain amount. So they would not be paying the full amount of penalties. So the reasonable steps that an employer would need to take to avail themselves of this is they need to be conducting periodic payroll audits and taking action in response. They need to be disseminating lawful written policies, training supervisors on the applicable law, and then lastly, taking corrective action against supervisors. So it's not enough to train our supervisors, but we want to make sure that we are also addressing and taking action if the supervisors are not, following, for example, our lawful policies. So again, just really big picture here in terms of why we should be concerned with wage and hour. It's very expensive if we get these things wrong. And so we want to make sure that we are understanding the basics so that we can comply. So still keeping it as sort of at that bird's eye level. So we have different laws that we have to worry about, right? We have at the federal level, the state level, as well as the local level, potentially, depending on where you are. We have to make sure that we are at all times complying with all of those. One of the things that first and foremost comes around with this is properly classifying our employees. So again, that's not the focus of today because we've touched on it in prior episodes, but first of all, if you're using independent contractors, I'll just remind those of you that you want to make sure that you're on solid ground there. Is your independent contractor truly an independent contractor? We have a strict test for that in California with certain exceptions that may have a slightly less rigorous test, but nonetheless, you still have certain requirements that need to be met. Setting independent contractors aside, once you are in the sphere of, yes, you're hiring employees, we need to determine, are those employees non-exempt or are hourly employees? Again, that's what we're focusing on here today. Or do they meet an exemption criteria that would allow them to be classified as exempt from the requirements? And again, we've talked about in previous episodes about those tests and the specific requirements. So again, we're focusing today on non-exempt and our hourly employees and what are all the requirements around that. But outside of classification, we just have some very basic obligations. We need to be familiar with our Industrial Welfare Commission, or the IWC wage order that applies to our workplace. So those are 17 different wage orders. The numbers differ based on different industries and occupations. We need to know which one applies to our workplace, and we need to have that posted up in the workplace. We also need to have our minimum wage order posted up in the workplace, and we'll talk about minimum wage shortly. And then, of course, ensuring that all of our company policies and practices comply with applicable laws. Again, for all the reasons that we just talked about, right? There's potential liability, there are penalties on top of unpaid wages. It's not just the underlying liability, it's the penalties, it's the attorney's fees and costs that are related to the litigation that may stem from these various violations. Okay, so we talked about non-exempt employees and the difference between non-exempt and, of course, the exempt is if they're meeting some exemption requirement related to their salary as well as their duties. The focus today is on our non-exempt employees. So non-exempt employees, we have very certain requirements that we need to meet. We need to record all of their hours that they work. We need to make sure that they're being paid at an hourly rate that is at least the minimum wage, and including any overtime hours, and we'll talk about how that's calculated. And we also have to make sure that we're providing them their meal and rest breaks. Again, there are specific timing and other provision requirements around meal and rest breaks, as well as any other requirements, some of which we're going to be talking about today as well. So you can contrast that with our exempt employees, where if somebody is truly an exempt employee, then that means that we're not tracking their hours worked. They're paid a salary. We don't have to worry about providing them meal and rest breaks. We don't have to worry about paying them overtime. So you can see the difference, but the reason it's so important that we get this correct, meaning if we're treating an employee as exempt, you could see how if it turns out that they were really not exempt and you misclassified them, that means that you're violating all of these things that are, and then some that are on the screen, right? All of these bullets about recording the hours worked, paying them at least minimum wage, overtime, right? That means you weren't paying them overtime, you weren't giving them meal and rest breaks, and that can go back 3-4 years. So you could see how that would be very expensive. So again, today we're focused on what are our obligations for our non-exempt employees. One of the first things that we need to do when our non-exempt or hourly employees are hired is that we provide them what is referred to as this notice to employee under Labor Code Section 2810.5. It's often sometimes referred to as the wage theft notice, and it provides certain key information related to what is the hourly rate of pay? Are there differing hourly rates of pay? For example, do you have a separate rate of pay for travel, which we're going to be talking about travel time, or it also includes information about paid sick leave. How are we providing paid sick leave? Again, another episode that you can go back where we've touched on paid sick leave. Also, other basic information that needs to be required. So we have to provide that notice to our non-exempt employees upon hire. And also we need to provide an updated notice if information changes, such as, let's say, maybe they receive a pay raise, so their hourly rate has changed. We need to provide that updated notice unless we are going to be providing it on a timely wage statement or some other writing required by law within 7 days. So in general, this notice wouldn't be required for any employees that are covered under a collective bargaining agreement, but outside of that, we need to make sure that, again, we are providing this notice at the time of hire. Okay, so we talked about minimum wage and the fact that we need to make sure that all of our non-exempt employees are being paid at least the minimum wage. Now that's the floor. That doesn't mean you can't pay more to be competitive, but at a minimum, we need to make sure that we're paying the applicable minimum wage. So at the statewide level, California's minimum wage for 2025 is $16.50 per hour. And we recently received the rate for 2026, so that will increase on January 1st, 2026 to $16.90. It does increase year after year, and usually that gets announced somewhere in the late summer by August. So, so we do have that rate. So you'll want to make sure again that you have that on your list of to-dos as we're phasing out 2025, entering into 2026 to make sure that your employees as of January 1 are paid that higher rate. Now, we also do have 2 industry-specific minimum wage requirements in California. So for fast food workers, they have to earn $20 an hour at a minimum. And then healthcare workers are ranging between $18 and $23 an hour. And it's really depending on what their healthcare facility type is. So if you are covered under those, likely you would be familiar because they are our specific requirements. Labor Commissioner's Office does have a lot of information and FAQs around who is covered and who has to pay these higher rates in case there is any confusion for any of you who may be wondering. But those applicable rates, again, if they're for those employees that are covered, we need to be paying those higher rates. Now, even aside from industry-specific rates, we also have local ordinances that we have to be thinking about as well, because many cities and counties throughout California impose higher minimum wage requirements. So if you have employees that are located and conducting work for you in a city or a county that imposes a higher minimum wage rate, then you need to be paying them that higher rate. Because again, we always have to make sure we're paying the highest wage that would apply to our employees. Okay, so now we know about, again, the minimum wage requirements. The other thing I should note is for any other additional, whether they're industry specific or whether they are local minimum wage ordinances, those have their own separate minimum wage postings in addition to the statewide minimum wage. So you want to make sure you have all of those applicable postings up as well. So now that we're going to talk about sort of how are we going to pay for all the time that's worked, we have to go through some foundation in terms of some definitions and things that do matter. They seem simple enough that it's easy, but they actually are technical, and it does matter when we get to talking about paying things like overtime. So the first thing that you need to know is, as a business, is how are you going to define your work week? So a work week is going to be a fixed recurring period of 7 consecutive days, and you can decide what the first day of that is going to be, right? And how it's going to flow out. It doesn't necessarily have to be, for example, Sunday through Saturday, which would be the default if that's how the California DLSE will presume, but you have the ability to set a different definition of the work week. Similar idea with a work day. That's any consecutive 24-hour period that would begin at the same time each calendar day. So again, you can define it. If you don't, California DLSE is going to presume that work day is going to be from 12:01 a.m. to midnight. So you can define these differently according to your business needs. And again, we'll talk as we get into overtime, we'll talk about how that can make a difference. And again, just a reminder, it's important for you to know which IWC wage order applies to your industry so that you can have that posted up in your work site. All right. So going back to our, several obligations that we have around paying our non-exempt employees, one of these is around maintaining accurate timekeeping records. So we need to be able to show the hours that our non-exempt employees are scheduled and then the hours that are actually worked. So it's not enough just to have one or the other. We do need to make sure that we have both. And we'll see again, the hours scheduled comes into play when we talk about things like reporting time pay. Another thing we need to make sure we have around our timekeeping is that we are including the shift start time as well as the shift end time. And then we also need to have the in and out punches reflected for the meal break, because again, that's an unpaid 30 minutes. So they will be clocking out and then back in after their meal period, unlike the rest breaks, which, as we've talked about in the past, they are not clocking out for rest breaks. So it's important for us to instruct our employees to accurately record their time. It's another best practice. We want to get acknowledgement from our employees to verify the timekeeping record. So, every day, every week period, we're having them acknowledge that, yes, this is the, these are, the timekeeping records do reflect what they actually worked. And then whoever is administering and maintaining our, whether we're hiring someone to do payroll or we're overseeing that, we want to make sure that we're regularly reviewing those timekeeping records and following up on any issues. So, for example, maybe you recognize that an employee's lunch punches are shorter than 30 minutes. Well, employees should be getting a minimum of 30 minutes. So that would be something that we need to follow first and foremost, because that would trigger a meal period premium that we have to pay them for. But then that could also inform us, is there something happening in our organization that is preventing employees from getting their full meal period, more of a systemic issue that we need to look at. So always a good idea to regularly review those timekeeping records. And then we also need to make sure that even if we have remote employees who are non-exempt or field workers or people who are working, off-site or in different work sites, we still need to maintain those records for those employees as well. All right, now what about off the clock work? This is something that sometimes can happen. But we just need to be aware as employers that we do need to pay for all time. So really there is no such thing as off the clock work. We need to make sure that our employees are clocked in while they're working. We should have a company policy that explicitly prohibits off the clock work, and that we're communicating that policy to our employees. Part of onboarding and orientation, again, where you're giving them maybe a handbook to review or telling them about key policies. This is one that would be very important. You want to make it clear to them that they should be clocked in for any time that they're doing work. And then also, if for some reason, let's say somebody clocks out at the end of their shift, and between, from them clocking out and heading to the parking lot, maybe somebody comes to them and needs their help with something, and now they've engaged in a few minutes of work. Well, we need to tell them that they need to let their manager know. So again, we can actually pay them for all of that time. So training our managers is going to be very important around this. They are going to be our first line of defense to help to prevent that off the clock work. And one of those things can include knowing to avoid communications with employees outside of working hours, such as text messaging. Many times our managers, they may be exempt, right? So the expectation is they're working, longer hours or different hours from our hourly employees. Well, if we have an exempt manager who is, text messaging an employee who's not scheduled, you could see how that could turn into now that employees, if they're having to provide information to the manager, now suddenly they're engaging in work outside of their working hours. That time isn't captured. Now we have unpaid time. So we want to avoid all of that. So one way is just, again, training our managers and really avoiding those communications with employees outside of working hours. Another thing that we can do is to limit our employees' access to work email and other messaging platforms when they're not clocked in. Okay, so we know by now, of course, that we have to pay for all hours worked. And so really that begs the question is, what do we mean by hours worked? What is considered hours worked? And we may have situations where the question is, well, do we really need to pay for this time? So hours worked is any time that the employees are suffered or permitted to work, or they are under the employer's control. So pretty much, think of it as they're doing anything for the employer's benefit. They're being directed to do anything. That's going to be considered hours worked. And they need to be paid for that time, even if it's not. Sometimes people may get caught into, well, they're not doing, what I hired them to do, meaning they're not doing something specifically in their job description. That may be the case. So that doesn't take away from the fact that it's going to be considered hours worked under the eyes of the law, and that we need to pay for that time. So some examples of this. So if they're spending time in required trainings or meetings, right? They may just be sitting there in a meeting and we need them there for it, but they're not actively doing anything. That's still time that they need to be paid for. Similarly, required trainings. For example, we have required trainings that, California requires harassment prevention training and workplace violence prevention training. That's not really, employers don't look at that as necessarily a benefit, right? That's just a compliance thing that we have to check off of our list, but we still need to pay them for that time because we are requiring those employees to participate in those trainings. Another example is if they're engaging in activities before or after shifts, at the employer's direction. An example of this is what is referred to as donning and doffing uniforms, right? They're changing into uniforms or preparing their uniforms before the shift, or protective equipment. Or if employees are waiting for and or completing security checks. We had a case several years ago where a retailer was requiring employees, so after they clocked out, they had to go through a security check to have their bags checked as they were exiting the premises. Well, this took some time, and the courts recognized that they're under the control of the employer and they needed to be paid for that time. And so even what may be considered de minimis, which is something that's recognized at the federal level, where it's so small, it's considered small, that doesn't need to be paid. That doesn't exist here in California. And so even if you're talking 1 minute, 2 minute, that comes to your attention that maybe previously wasn't captured, right? We need to get that corrected. We need to pay. So, and we need to make sure that our employees understand do not clock out until you have completed all work, because we need to pay you for all hours worked. All right, so part of paying our employees, of course, has to do with timely payment of wages. So we do need to make sure our employees are paid at least twice a month on designated pay days. So for work that's performed between the 1st and the 15th days of the month, they need to be paid by the 26th day of the same month. And for work performed between the 16th and the last days of the month, they need to be paid by the 10th day of the next month. If you are paying biweekly or weekly or semi-monthly, payday has to be within 7 calendar days of the end of the pay period. So we have very specific requirements around the timing. We do also have requirements around the wage payment itself. So you can pay by check. More commonly, we see direct deposit. You do need to have the employee's authorization. You can also pay by cash. So when you're paying the wages, we need to make sure that we have that accurate itemized wage statement, also referred to as the pay stub, and we'll see an example of one here in a moment. And as we, again, some of you who've come to these other episodes or seen the other episodes that we've talked about, very specific requirements that need to be included on that wage statement. That is one of the areas that has can cause class actions, PAGA actions that are very expensive, that come with penalties and all the things. So you want to make sure that your pay stubs are sound and compliant with California's requirements. Now, the wage statements can be provided as a detachable part of the check, draft, or voucher if you're for paying the employee's wages. It can also be a separate writing if you're paying by personal check or cash. Now, I want to make a note here just about permissible payroll deductions, because employers in California are extremely limited in what payroll deductions they can make when it comes to an employee's paycheck. So this is all under statutory law. We have the 3 permissible deductions that you see listed on this slide. So we have tax deduction. So of course, anything that's required by state or federal law. Then we have third-party deductions that might come from garnishments or child or spousal support. And then lastly, we have, of course, employee benefit deduction. So things that are deductions authorized by the employee for health benefit premiums, union dues, 401k plans, things of that nature. Those 3 things are what is permissible when we're talking about payroll deduction. Now, notice that you didn't hear me say things such as uniform cost, any sort of equipment reimbursement, things like if you gave a loan to your employee, right? That we're not making deductions of anything like that. So again, you just know that they're very limited. If you think that something else needs to be deducted, that's where you definitely would want to consult with legal counsel. Okay, so I promised you a wage statement. So here is our wage statement. And it has a number of things. This does have everything that's required. We need to, of course, have the employer's information, address, what is the pay period, what is the pay date, and then what are all of the differing earnings. So we'll have regular, whatever their regular hourly rate is. Then overtime, we're going to talk about overtime. If there were any meal and rest break premiums that were paid because somebody maybe didn't get their meal and rest break on time, we need to have that reflected. As I mentioned, the deductions, so, regular tax deductions, things that are required, health insurance, 401k, right? All of those things would be listed there. And we also include California paid sick leave, of course. That's a requirement that we show. So this is just an example of the information that needs to be reflected on the wage statement. And remember, we have specific timing requirements for when we are timely paying the wages. Okay, so now let's move into overtime, because overtime, of course, still continues to be a part of paying for all hours worked. And so California is more expansive than federal law, and that federal law only requires weekly overtime. California actually requires daily and weekly overtime. And so the triggers are going to be for anything over 8 hours in a day, and that's any 8 hours in a work day. So this goes back to our discussion that we talked about where you're defining your work day and you're defining your work week. This is where that comes into play, because we look at, okay, 8 hours in a day, that means 8 hours in a work day, as however you define it. And if you're not defining it, then that default definition that we talked about. Or over 40 hours in a week, that's also going to trigger overtime, as well as the first 8 hours on the 7th consecutive day in the work week. So any of those 3 situations is going to trigger time and a half. And we'll talk about how that is specifically calculated. And then once you get into over 12 hours in a day, or anything that's over 8 hours on the 7th consecutive day in the work week, then you're looking at double time. Okay, so another important thing to note about overtime is oftentimes employers, of course, have policies or practices where the idea is that an employee is not going to work overtime without it being approved, right? And that's a very standard practice that many employers will have, and that's certainly up to you to have that policy. The thing we need to know, though, is that even if you have such a policy, if the employee does work overtime, they still need to be paid for it, even if that overtime was not approved. Okay, so when we're talking about 1.5 times or 2 times, what do we mean? That's paid at what is referred to as the regular rate of pay. So the regular rate of pay is something that is different, is not necessarily identical to somebody's standard hourly rate of pay. And that's because it includes other forms of compensation that are paid to employees during that work week. So it can include piece rate earnings, commissions, non-discretionary bonuses. And so we have to calculate that by dividing the total compensation earned in that work week that they would have worked the overtime. And then we divide that by the total hours that are worked. Now, the regular rate of pay is also going to come into play when we're calculating meal premiums for, meal and rest break violations, as well as reporting time pay, which we're going to talk about. And also sick leave is actually paid at the regular rate of pay. So it's, again, not necessarily just the hourly rate. Now, if you have an hourly rate employee, and that's truly the only form of compensation they're getting is that single hourly rate and there's nothing else, then maybe that will be the same. But we always have to flag that, because for many types of employees, that isn't the case. So there will be different calculation methods required when you're paying multiple rates or paying non-discretionary bonuses. So you want to make sure, again, that you're understanding for your employee situation what their regular rate of pay is, because that is going to, if it's calculated incorrectly, basically you could be shorting them on overtime and then have liability for unpaid wages. All right, so now let's talk about reporting time pay. So reporting time pay is something, it's really similar to what the name suggests. So if you have an employee, they're reporting to work as scheduled, but they're not put to work, then we have to pay them half of their shift subject to limitation. So it would be up to 4 hours and at a minimum of 2 hours. And again, that's paid at the regular rate of pay. So it's, again, not just necessarily their hourly rate. So for example, you have an employee, they're scheduled for an 8-hour shift, they report to work, then they're told there is no work for them, or they're sent home for whatever reason, and they didn't work at all. They're entitled to half of their scheduled hours subject to those limitations. So they're going to get that maximum of 4 hours. They were scheduled for 8 hours. Half of that is 4. That's still within the bounds of the maximum of 4 hours. So they will get 4 hours paid at their regular rate of pay. Now, there are some exceptions to this. So if you already have an employee who's paid on standby status, that's not going to account. If you have, if the situation is that operations can't begin due to threats or recommendations by civil authority, meaning it's pretty much out of your hands, but you're, you know, there's something going on that is preventing operations due to that, then that would be a situation that is not going to trigger reporting time pay. Or if it's due to public utilities going out, so we don't have water, gas, or electricity, that would be an exception. And then lastly, an act of God interrupting work. So something like an earthquake or a fire would also be an exception to our reporting time pay obligations. Another common scenario where we have to keep in mind reporting time pay is, let's say you need to terminate an employee and then they report to work, you notify them immediately that they are fired. Then you need to make sure you're factoring in the reporting time pay obligations with the rest of their final pay. And I think we'll be talking about termination later in a future episode. So that would be something, again, that has to be factored in final pay because we have to pay that immediately at the time of termination. So it's just something to keep in mind if you're ever in that situation as well. Okay, so now let's talk about travel time and expense reimbursement. And the first thing I want to emphasize is that these are two separate obligations. So when we're talking about travel time, that is hours worked, and that means that we do have to pay for the time. So first and foremost, we'll start with, distinguish that from general commute time. So commute time is, the time that our employees are, coming to and from work. That's generally unpaid, right? That's pretty well understood. Now, the exception to that is if there's something that the employer is doing to exert any kind of control over the employee during the commute, then that could turn it into travel time. One example of that is, for example, you have an employee who utilizes a company vehicle and they have the ability to use that company vehicle to arrive to and depart work. That's fine. But then if we start putting a lot of limitations in terms of you can't have anyone else in the car, you can't run errands, let's say, on your way home, right? You have to go directly from the workplace to your home and not make any stops, right? You could see how the more you control it, then at that point, you could put yourself into a travel time situation, meaning we actually have to pay our employees for that commute time home. So that's just one example of how that control could come into play with the commute. But outside of the general commute, right, then we have to look at, okay, what is going to constitute travel time, meaning that we're paying them because that's hours worked. So that would be things like traveling between work locations during the workday. You have an employee, they report to their usual site, and maybe now they have to go from site A to site B in the middle of the workday, and then maybe they're even going from site B to site C. So that time from going to their original work site to site B and the time from going from B to C, that would be travel time. So they would have to be on the clock and we would need to pay them for that time. Similarly, if they have a main hub that they generally report to, but then throughout the day they go to client sites, right? So the time that they're going to a client site, that would be travel time. Or if they're going to a required meeting or conference. And so a lot of times we get questions about this. Well, we have an annual conference that we send our employees to and they have to travel, right? Maybe they're traveling at the airport and they're just sitting on the airplane. They're not working, right? So the question is, do we have to pay them for that time? And the answer is yes, you do, because they are being required to attend that event. And so they need to be paid for that time. And so again, this travel time, though, is separate from the reimbursement of travel expenses. So expense reimbursement, let's just take it globally at a global level, this is something we always have to do. For any expenses that are incurred in the performance of an employee's job, we have to reimburse. That's under Labor Code Section 2802. And again, this is something that can get you in trouble with the labor commissioner or subject you to a suit if you're not doing it. So a common example where we do see expense reimbursement come up is in the realm of travel-related expenses. Again, separate though from the travel time. So for those employees, let's say where they're using their personal vehicles and they're going to a they're going to a client site, right, in their personal vehicle, then one way that we can reimburse them is applying the IRS mileage rate for the use of that personal vehicle. So the IRS rate is not a requirement when it comes to reimbursement, but it is an acceptable reimbursement method for the use of an employee's personal vehicle. And the IRS rate, it changes every year, and it's usually on the very last day of the year when they'll announce for that following year. So you want to make sure you stay on top of it going into 2026, but the rate for this year is 70 cents per mile. So again, separate from any time that you're going to calculate for an employee who's traveling for work and in their personal vehicle, you would also be reimbursing them, as an example, that 70 cents per mile. Another example, though, of a travel expense could be for that employee who is traveling, at the airport, right? They would have maybe meals related to that, right? If they need to eat something, or parking to park at the airport, things like that, those would be included as well. Another common expense reimbursement that comes up is with required cell phone use. And so if you have employees where you are requiring the use of their cell phone, then we need to reimburse them some reasonable percentage of their cell phone bill. We don't really have a whole lot of guidance, unfortunately, in terms of beyond that. It's just reasonable percentage. As we know, reasonable it's going to be fact specific, right? So it's going to really depend on, you have to ask yourself, well, how much is this employee using their phone? And remember, this is required usage. So some employers, for example, they may provide employees with company issued phones or company issued tablets. I know the two-factor authentication can be an issue sometimes where you need to have another device where they can authenticate for security purposes. So one workaround, of course, is you have those separate devices. But if you don't have the ability for that, then you just need to be aware that you're reimbursing some reasonable percentage. Another thing to be aware of around expense reimbursement is that even if you have a practice or policy where you're telling your employees, they must be, you want them to be submitted for accounting purposes, by no later than whatever date or, X amount of time, just be aware that if it does come in late, you still have an obligation to reimburse them for it. Another thing I should flag, because we often talk about expense reimbursement in tandem with the travel time. Expense reimbursement is also something that's an obligation for any of your employees. So even outside of our non-exempt employees, if you have exempt employees who travel for work in their personal vehicle, for example, they're still going to be entitled to this mileage. This piece is not limited to non-exempt employees. All right, excuse me. So let's talk about, again, employee handbooks. I've touched on them a little bit along the way, but just a reminder that, yes, it's true that employee handbooks, having a comprehensive employee handbook in and of itself is not a legal requirement. However, it absolutely is a recommended best practice. It's how you can communicate expectations to your employees. It's going to demonstrate, what is expected and what you are providing. It's going to demonstrate your compliance with the law because it's going to lay out certain things, for example, around your policies and what the expectations are. It's also going to serve as a great reference guide for your managers. And so, again, there's a whole number of reasons why you would want to have an employee handbook. And if you don't have one, should definitely consider having one. And then, of course, you want to make sure that they're regularly reviewed and updated, because as laws change, as requirements change, we want to make sure that we're also staying up to date. Because if there's anything worse than not having a handbook, it's having an out-of-date handbook, because that will give you even more trouble. So with what we talked about today, what are some of the key policies that you would want to think about for having for your non-exempt employees? Well, first and foremost, we have those timekeeping requirements and the fact that we don't want our employees working off the clock. So that policy is going to be a great place for us to remind them to, yes, accurately track all-time work. They need to clock in and out, and they should not be engaging in any work off the clock. This is also really a really important policy if you have remote employees, because they're not always in our line of sight, right? So it's important for our remote employees to also be aware and to know that, they shouldn't, especially because if they're just working out of their home, it can be so easy to just log on really quick, do a couple of things here and there. We need to make sure we have the expectations set for them. Meal and rest breaks, right? The fact that they should be taking them in a timely fashion, the fact that they should be clocking out for the meal periods. Same thing with overtime. We talked about the fact that even if the expectation is that they're getting approval for that overtime, if they've worked it, we have to pay them for it. Now, that doesn't mean that you couldn't discipline them from a policy violation standpoint. You absolutely could, but it does not relieve us of our obligation to pay for the time that they were working. The handbook also is going to be a great place where we can lay out the pay days and pay periods. Now, remember, even if we have a policy with that information, don't forget you have your minimum notice to non-exempt employee that needs to be provided upon hire for all of our non-exempt employees. So make sure that you're still providing that on their first day of work. Expense reimbursement we talked about. So having a policy that's going to communicate to your employees, what is the process for submitting expenses for reimbursement? What is reimbursable? What is not? People might have questions about that, or just being able to direct them to, contact this person, particular person, if you have questions about expense reimbursement. And then, of course, we talked about recent PAGA reform and the fact that employers who are taking those reasonable steps to be in compliance proactively that will benefit you if you end up in the unfortunate situation of having a PAGA claim brought against you. You may have the ability to have your penalties capped. So part of those reasonable steps, if you'll remember, included disseminating lawful written policies. And so again, a handbook is a great place for you to be able to do that and take advantage of that. And again, really at the end of the day, compliance is key here, right? When we talk about things wage and hour, they're very technical requirements. So the more that we can communicate and disseminate to our workforce, the more that we can train our managers and hold them accountable, that's going to put us in the very best position. So that brings us to time. And so I think we have a couple more minutes. I'm happy to take any questions if you have any.
Excuse me. Awesome. Thank you, Bianca, for that. Very, very great and valuable information. I had a few questions, though, when it came to expense reimbursement. There's a few things, excuse me, there was a few things that you mentioned around what's reasonable, like a reasonable percentage around like cell phone bills. I know as an employer and as an employee, sometimes we do get cell phones and sometimes they do give cell phones. But when you say reasonable percentage, what does that look like for an employer?
Yeah, so that's a really good question. That reasonable percentage phrase has come out of case law, where that is pretty much the guidance that we have from the courts, where they say you have to reimburse something, but there is no formula. There is really no like exact way to calculate it. So really what you have to look at is, how often is that employee required to use their personal cell phone for work,
Okay.
right? So if it's only one day out of an entire month, you could see how that would be really small. But if they're using it heavily, right, using it for phone calls, they have apps on their phones, different things, then all I can really say is the more usage, then the higher the percentage should be. But beyond that, we don't really have any exact guidance.
Isn't it, can an employer ask for like usage, data usage, cell phone bills? Can an employer ask for that type of information to make that reasonable percentage?
Yes, so because in order to reimburse, right? So part of that is they would submit a copy of their bill. And so that could, now in terms of how technical could you get with like, how are you parsing out like the data usage? I don't know if that's something that could be done, perhaps maybe with phone calls though, right? Phone call length, I could see how that would be done. I'll be honest, I haven't looked at my cell phone bill in a long time and
You
analyzed it.
you and me both.
So how detailed they are these days, I don't
Right.
know. But yeah, I mean, you could certainly look at those things to help you to determine what is
What's
going to be
reasonable?
reasonable. Yes.
And as we work, and we do have a question in the chat, Ariana does have a question. Before we get to that question, I know we work in a time where remote work is very, very useful in today's workforce. And so when we talk about employees, whether it be non-exempt employees working remotely, in some cases, um, is are there opportunities for reimbursements for like internet or electricity bills? How does that work for someone who is working from home?
Yes. So internet could be something, right? If it's a remote employee and let's say the employer has no work site, there is nowhere else for that employee to work. They in fact have to work from their home and they need internet in order to do their job, then yes, that's something that could fall in that category. Now, where it may not be as clear cut though, is if you have like a hybrid work situation where let's say the office, or the workplace remains open and you're giving the employees the option to certain days they can choose to work remotely, but you're not requiring them to, then you could see how that would change the analysis, right? Because then at that
Absolutely.
point, you have internet at the office, you're choosing to use your own internet,
Got it.
right? So it would depend on the situation, I think.
Awesome. Well, thanks for that. See, that's why you're the attorney and I'm not. So, great answer. So Ariana has, and forgive me if I'm saying it wrong, but has a question. Can employers pay an average time for checking emails, replying to text messages outside of working hours?
No. So if they're checking emails, replying to text messages, those are going to fall under the category of work, the time that they're working. And so we need to make sure in a perfect world, they're already clocked in when they're doing it, right? If the nature of the work is such that there are times unpredictably they are, have to respond or engage, then we just need to make sure that we are accurately paying them for that time. And so you want to stay away from sort of any just general, oh, we're going to pad this amount of time, because one of our obligations is we have to have the timekeeping records to accurately reflect when they're working. And then remember that all the scheduled work can come into play. If they're ever called into work, when they're not scheduled, reporting time pay could come into play as well. So, but we want to make sure basically that, I mean, the best case scenario is you're avoiding texting and emailing outside of their normal working hours. If an emergency situation happens where you have to engage with them, then we need to make sure that we're paying them for that time.
Yeah. Awesome. Great question, by the way, and thank you for your engagement. Great answer, Bianca. And so, if there are any more questions, feel free to throw them in the chat. I know we're a little bit over time now, but we did start a little bit late, so I do want to be a little graceful there. And as I'm seeing no questions pop up in the chat, one, I want to say thank you, Bianca, for this very crucial information. Super helpful for all of our small businesses across California. For those who attended today and who were on time, we want to thank you for being here. Thank you for your engagement. If you did not get a chance to check out our previous webinars, there is a link in the chat. Feel free to click on that link, and there are about 9 or 10 other webinars that our groups have hosted. Bianca and myself and our respective organizations have hosted for more information. If you have a question, there is a link on that page to allow you to ask questions that may come up later as you digest all of this information. So again, I want to say thank you for coming. Thank you for being here. Bianca, thank you so much for answering our questions and providing us with this information. And look for our link, because we will have one more episode coming out next month. I believe next month in November, and it will be our last one. So feel free to connect with us, ask questions, and look forward to the next one. Bianca, thank you so much, and I look forward to seeing you in November.
Thank you so much. Thanks, everyone.